Ladies and gentlemen, please welcome founder and CEO, OYO, Ritesh Agrawal, in discussion with Skift founder and CEO, Rafat Ali.
All right, good afternoon, everyone. How are you doing? Still awake? Okay. So thank you all for sticking around. This is the, if I can say so myself, I was looking forward to this session a lot, obviously because I was doing it, besides that. Ritesh and I share a lot in common. That doesn't include our age. He's 25, I'm 45. So they started in 2012. They're a $5 billion company. We started in 2012. We are, I don't know what we are, $50 million? Something like that. So that's all we have in common. But we also a little bit all common. We come from not the same town in India, but small towns in India. So we have a similar upbringing, if you will. If you how many of you know about OYO as a company and sort of all of what it's doing? Okay, so I would say a fair amount of people. Can we bring up that slide that I mentioned? Okay, so up here. Okay, so I mentioned this in my opening presentation that OYO is probably one of the most exciting companies on the planet today, not just in travel, globally, and the pace at which they are scaling is just incredible, and you can probably tell what it is. Brown people like you and me are not supposed to have these global ambitions. People from India don't say, we're going to create a world-class global company that will become the world's largest hotel company in 10 years. That's what you said when you started in 2013. And you said you're now saying by 2023, you're going to become the world's largest hotel company by revenue, by rooms, by margin.
Yeah.
Why put that huge mark on your back?
Look, I think first off, thank you so much for having me. I mean, this is something that we agreed to do, I think, a year back.
Right.
And let me tell you that now we are whole, because it was my bad that it took longer for us to put this together. But I'm very, very thankful to have the opportunity to come speak here. So thank you for having me here. Maybe I can take a couple of minutes to introduce myself and our company, and then talk about why people like us are having this discussion. So, I think I grew up in the eastern half of India, in a state called Odisha, which is right next to West Bengal, which has Calcutta, and Kolkata is a more famous city. So maybe that is an easier benchmark to compare with. As a young kid, I was always the last bencher, but wanting to do different things. So I wanted to sell SIM cards, FMCG products, and whatnot while still in school. So the symptoms were there very early, that there is something wrong going on here. So we contribute significantly to Indian population. We have 4 siblings. I'm the youngest of the lot. So 3 of the others did engineering, business school, job, couple of them outside of India, mostly through financial aid. So family felt the portfolio is done 75% right. So the last 25% can be a black sheep, doesn't really hurt.
Yeah, I know how that feels, yes.
So that's sort of, propelled my parents to say that, go wherever you like for your further education. So I basically did the maths of saying, how far away from home can I get to be so that I can do all the new things I want to. So I decided a place called Kota, Rajasthan, which is in the northwestern part of the country. It would take you 3.5 days if you took a train to get there from the place I was at. So my parents visited in 2 years only once. So those 2 years were really the period where I was excited about trying new things, about learning new things and so on. Long story short, right after my 12th grade, I was naive enough to start my first company. That is to allow people to book guest houses, bed and breakfasts, and so on. We had over 10,000.
This is when you were inspired by Airbnb and said, I want to do this.
I was definitely inspired by Airbnb. Do we have a friend from Airbnb around?
Yes, somewhere here. They're obviously now investors in
yes, we are dear friends. So So with that perspective in mind, I think in a couple of months I realized that this is not something the world could do with one less booking site. I felt that there was genuinely a challenge of somebody coming in and saying that, how do you completely reinvent and beautify these buildings while providing the right price points? And the learning came after I shut this company down and spent 3 months every day staying in a new guest house, bed and breakfast, and so on, because all these homeowners had become friends. And remember, this is still school and university, so this is not a carefully crafted out plan after 12th grade that 3 months of learning and then boom, there's going to be a big business. I mean, there's still, at that point of time, very few aspirations. But here's the fascinating thing I learned. Worldwide, over 90% of the hotel buildings are 100 rooms or smaller. And every hotel chain likes to focus on assets which are 100 rooms or larger.
Right.
Whether you look at the Paddington or the Bayswater in London, and these are beautiful locations, like Bayswater is right next to the Hyde Park.
Right.
And then you have a queue of these 100 buildings that have existed there forever. And if you look at Indonesia, if you look at US, if you look at Latin America, these have existed in every part of the world. So I felt there could be two reasons why nobody's done it. The first, nobody tried hard enough. And second, is it structurally not possible?
Mm-hmm.
Look,
From a financial structure perspective, etc.
Yes. Now, look, my downside was going back to university, which is not really a downside after all.
Right.
So I was an eternal optimist. I said, I will absolutely take this chance, even if it's an 11% chance. So I took the chance, built the first hotel, built as in, we renovated the first building. So just for people who are new in the room who don't know about OYO, OYO goes to buildings, invests the capex, redesigns the building, sends the general manager, controls the entire asset and makes sure that we can provide a better looking asset at a lower price point so consumers fall in love and we can generate better return per square feet. So it's a, sorry I oversimplified it, but this
Can
is
we get the
essentially
slide up here for a second? I just want quickly to go over.
yeah. So maybe I could take the opportunity and give you a perspective that OYO operates across brand segments, and the view we have is across these brand segments there is a different proposition, whether it is OYO Rooms, which is the iconic red logo. This, the same brand, by the way, has grey connotation in UK. OYO Townhouse is the grey buildings, grey and red buildings look very bright. This is the mid-scale chic assets. So for a lot of you who've seen Ace Hotels or similar chic new age brands, it's similar to that, or Hoxton to that manner, because talking about Indians
Sharon,
today.
Yeah.
Silver Keys executive apartments, so a lot of you would have known about the executive long-term stays that companies sponsor people for projects. Capital O is specifically for Capital and Collection O are sort of between chic places, but for leisure travelers is more Capital O, and Collection O is more for business travelers. And Palette Resorts is really the high-end resorts business that we have, which is think about a $400 resort with a private villa, private pool, spa, private beach access, and the likes. So this is just sort of our primary hotel offering. We also have a vacation rental offering. We are among
just bought at Leisure.
We also acquired a company called At Leisure.
500 billion, almost $500 million.
Yeah, so 369 million euros. So my job to remember every million euro we pay for it, because I have to return that for our shareholders eventually. And of course, we also run organically our vacation rental management company between India, UK, Dubai, and a few other countries.
So in terms of this, just in interest of time, you operate now in 10 different countries. India is still second largest. China is growing at just a phenomenal pace. A lot of international companies have gone into China and not been able to succeed. What are you doing that's different? Why is it for now supply, or is the demand also there as well?
Yeah, look, I think every building we open, we are able to double the occupancy in less than 3 months. To the extent we can keep doing that, we are very interested in continuing to get supply. But I will break the answer in two parts. The first one is to just give a perspective about our scale. We manage worldwide between our leased partner and franchise business approximately 750,000 rooms.
Which makes you the world's
sixth largest hotel group as we speak. We're jumping a spot a month because we're opening over 75,000 rooms every month worldwide. Across, like for example, we're opening 2 buildings a day in the UK. We are opening roughly 10 to 12 buildings a day in China. We are opening roughly the same in India. We are opening a couple of them in Indonesia. So there is a rapid speed up. Last year, December, it's matter of public information, we issue an annual report. We ended the year at sales run rate of roughly $1.8 billion. But that's not exciting. The more exciting bit is growing at 4.3 times year over year, which effectively, at least I don't know any other company with this base growing as quickly as we are, which makes it a very special story. The reason why all of these are possible is because of our one perspective, which is every overnight success is a 5-year-old story. We believe that any success that you hear today and it's overnight, it's not sustainable. Invariably, the girl or the guy is hard at work for over 5 years.
Right.
And I believe that for the last 5 years, we invested in 4 of our key competencies. We are the smartest company to identify which location and how much lease to pay. And hence, we are able to identify the right buildings and the right risk. We're the smartest company which can expect what kind of interior design gives us the best RevPAR. So we use TensorFlow, as many engineers are in the house will know what I'm talking about. It's an imaging sciences tool from Google. We predict what kind of interior design gives us the best RevPAR to CapEx ratio, and we just copy-paste the design across the city, similar to Netflix originals. Adam Sandler movies doing great, so just put him in every movie possible. The third one is operating.
I'm too old for this reference. I don't know what he said, but whatever. Okay, go ahead.
The third one is operating assets in an efficient manner. It's just unfair that for the longest time, housekeeping people have been paid the same salary for 8 hours of work across the world. That does not inspire innovation, hard work, or any of those things. So we give our housekeeping people a mobile app in which they're told which room to go and clean. And if they clean quicker and they get a 5-star rating from the consumer, they get paid more, due to which we have had to hire lesser people and pay the people who work for us much higher than the market standards. And the fourth, because of which we're one of the most sophisticated operators. For example, in India, 94% of our revenue is repeat or word of mouth. So we don't spend a lot of money on
That's because
that.
you've invested a lot in the direct channels and your advertising and brand building?
I think our company gets very little demand because of our advertisements. We spend very little money on advertisement as a principle. We believe great products inspire consumers to come there and then tell their friends that this is a great product and you should go check it out. And the fourth is yield management. We change our prices depending on the day over 50 million to 100 million times a day, which means that we would know essentially which asset being seen from which geography at what hour of the day during what kind of an event, what is the pricing that should change. And the people who are, for instance, Guinness Book of World Record holders of the number of research papers they've written, who are running these sciences on the background. So these are the 4 secret sauces of ours that enable us to deliver the outcome.
And is that working in China? So China, we were talking about China. So what are you doing differently in China that is working?
So I think besides all of these, which are plain Jane competencies, it's the mindset. When we went to China first, I have been going to China for over 4 years before we decided that we go there. And I think one of the decisions we made is that by design, a global company will never be successful in China versus a local entrepreneur. And if that be the case, we should become the local entrepreneurs wanting to copy OYO. So we have this paranoia at OYO China, or OYO Jiudian as we call it. OYO Jiudian is hotel in Chinese.
Okay.
We are invariably paranoid about saying that the OYO global guys want to launch in China, and before they come, we're going to out-execute them in every manner possible. And one example of that is, for instance, check-in. We know that these guys are global guys. They will never get the local Chinese ecosystem of check-ins, but we are smart. We are going to enable WeChat check-ins in the next 2 weeks, so that by the time they come, they would realize that there are over 20 million customers who have used our WeChat check-in, so they can never win against us. So we feel that if somebody locally was going to compete against OYO Global and win, then we should be that, rather than somebody else. So we thought of ourselves as rebels who were copying OYO Global in China. And that mindset enabled us to think 2 levels ahead of anybody else.
How many employees do you have in China now?
So we have 10,000 direct employees and 100,000 contractors. So
And how many overall the company OYO today has employees?
worldwide, that's roughly 18,000 direct employees and roughly 200,000 contractors.
And so now Europe is obviously, you've said publicly, and obviously you're doing it. UK is the first market,
Yes.
and
yes.
then US, you're just starting. I heard that now you're spending at least 2-3 days every month in the US, maybe more.
Yeah, I'm spending quite a bit of time. So specifically talking about Europe, I see that Europe is, the home of unbranded assets. And the opportunity that we've seen with UK has been fascinating. The first asset that we opened at Sussex Gardens went from 65 to 91% in 2 weeks and then has held up there forever. It's not like, just to give you some perspective, 2 buildings a day sounds like trivial when you compare to China, but it is a pretty sizable impact that we've made, and we're not happy. I mean, we're going to make it much bigger because the results you're
British
seeing.
people move slowly in general, so that's whatever it is, it doesn't matter.
We're going to make.
I was born there, I can say that, so whatever.
So we're going to make big impact in the UK. We, of course, are going to scale across Europe. Now you find with At Leisure and a vacation rental with us right from Denmark to Spain, which is pretty much the range. In the US, I think the early results have been fascinating. I'm spending a lot of time there.
Why did you start with Dallas, of all places?
I think, of course, there is, of course, a logical perspective to it, which is Dallas is among the top 5-6 cities in the country. Texas has one of the largest number of assets, which are hotels in nature. So there is, of course, that. But some of our key leaders had worked in Dallas.
Okay.
So that, as you may know, outside of the logic, that is, also an ability of being able to make a decision.
Okay, so let's go a little bit into the financing part, into the money part,
Yeah.
because we don't have tons of time left. But so raised $2 billion, correct?
$1.5 billion.
$1.5 billion. You just, the announcement recently was Airbnb, right? Yeah. And you have investment from Grab here as well.
Yes, Grab is a very important partner.
Any other investor in Singapore?
I think there's one more investor that we had, which is DSG Consumer Partners, but they exited a couple of months back.
Okay, so why take money from Airbnb? Semi-competitor, not competitor, etc.
So we feel Airbnb as a very deep partner for us. We believe that we are the vacation rental lessee, operator, designer of sorts. Okay. And Airbnb as a great distributor of that supply. Right. So, and of course, Booking.com as well. But to the extent where we are able to create great spaces, they will be able to distribute better. And to the extent they can distribute better, we can create more spaces.
Right. So you are the supplier, they're the distributor, and that's how the sort of the.
That's how the the differentiation works. I think from our perspective, the capital we've raised, is from partners who genuinely believe that there's an opportunity here, rather than just be the largest hotel company, potentially become what the next generation living spaces will look like. Last week, there were 3 billion middle-income people who slept in spaces that were less than extraordinary. That's unfair. We want to create beautiful, it should just Tribeca and Soho, or Meatpacking District people don't deserve beautiful spaces. Mm-hmm. I believe people across the world, including the US, who are middle income should deserve beautiful spaces.
And will you always stay in the band you are in terms of, I know you have some of these other more higher end, but in general, your core of the offering, your core proposition will remain that sort of, I don't know what the word is, budget.
So let me change that perspective to say that, look, for instance, in Europe, At Leisure would do, €100 a week,
right.
€1,000 a week sort of demand. Or for instance, in London, if you go to the center of the town, or a lot of OYO hotels are £180 a night, which is not really budget. But the perspective we have is as under. We are focused on making an impact to the largest volume of people. Now, in that, we will, of course, make an impact across price points, but invariably, the biggest impact will be for the people, which is mid-scale to economy in sort of nature.
Can we add 5 minutes to the clock, please? I have the ability to do that, so they're doing that. A lot of people will say you're losing a lot of money, your SoftBank money. Let's have a SoftBank question first. We'll come to the other thing. What has being part of the SoftBank Vision Fund been? Obviously, there, for those of you obviously who know the strategy, which is these giant, iconic startups helping each other grow, investing in each other. What has that meant to you in terms of growing globally?
So look, first off, I think Vision Fund is a new phenomena, and it's a lot of people don't understand that because it only started like a year and a half back, but it's made a massive impact. And the reason for that, I believe, is Sonsan. His name is Masa Son, but some people call him Masa-san, and I refer him as Sonsan. I think he's one of the most iconic investors of this decade that I would have thought about. And the reason is his ability of being able to be at specific level of detail and ability to sort of go out and look at a macro is unprecedented. One example of that is China. I was a big believer in China. I wanted to be there, but at the same time, just that ability of saying that, I believe this is the right thing to do, Ritesh. If you believe as an entrepreneur that's the right thing, I think along with objective conviction, helps you sort of take ahead. So I actually, believe that I would not have operated in China, which is our biggest market today, if not for Sonsan giving me the confidence of saying that you should absolutely go and do it. And reality is at that point of time, it was not capital, it was nothing. It was just saying that if you genuinely believe this has to happen as an entrepreneur, you should absolutely go do it. And that should, if that means that you take 10% of your balance sheet and risk, I mean, there is a reason it is called risk capital.
So speaking of balance sheet, when will it be in the black?
So I can share some historical perspective. So we issue our annual reports publicly every year. So those of you who would like to...
Is that required by regulation in India?
No, I think we do it by interest of transparency.
Okay.
So in the last 3 years, we were at minus 40% of group level PAT 2 years back. Last year that we have publicly announced our audited numbers was minus 20%. We always issue a 1-year forward guidance as well. Okay. So our guidance is minus 10% for this year, which is year ended 2019. So I believe we will absolutely hit that guidance. So if that's the perspective of saying that how we continue to improve on our underlying margins, because our hotels and buildings across the world generate money, but because we have 1,400 software engineers and a lot of other central leadership, we spend more money for our employees than the profits that we generate from our buildings that come to a corporate office.
Interesting.
And that will get amortized eventually.
So in terms of the, when are you IPOing?
I think, hard for me to say that now, but I think at some point of time we will consider.
So versus, like, you meet Sebastian tomorrow. Sebastian Bazin, the CEO of Accor. He says, Ritesh, here's $10 billion. Will you take it?
No, I think it's a hard transaction to be had here.
Because your valuation today is about $5 billion that I guess has been publicly reported.
So I think, let me answer it from the perspective how I would answer anybody. I think the only reason I continue to be excited about what I'm doing is the potential impact it has across the world. In India, a lot of parents, not India, worldwide, when you're messaging on dinner, they ask you this question of, why are you working so hard? So my parents also asked this one day they'd come.
Shadi, when is your shadi?
So that night I went to Wuhan. I was flying out to Wuhan. And in Wuhan, every street I saw like 10 or 12 OYO hotels. And people walking in their buses, right? You have group business, so you have like grandmothers and the children all walking in, so excited. I felt what an amazing opportunity I have that every street across the world can have a beautiful living space which a common man can afford. I think that opportunity is really unique. Now, to the extent I can keep focusing on that opportunity, I think what is the capital structure, etc., is an outcome of that. I'm only focused on that impact. That's probably the right way of thinking about it.
So I'm trying to figure out what the answer is then. The C-Trip announcement, you're breaking some news. Please tell it.
So, of course, this morning we announced that in China, of course, OYO Hotels used to distribute on C-Trip, but we had a very local ground level partnerships. It was never really at a brand level. Now, OYO Hotels and C-Trip have signed a very strong strategic partnership where you will find OYO Hotels on C-Trip, but along with that, find very special advertising opportunities, very special integrated deals across multiple businesses of C-Trip starting this week. So us and C-Trip are announcing it today, and it should be up in the news in a few hours, hopefully.
So let's go to questions. Can we put up the questions up there? I'll take the second one with your, I don't know where, first one. More acquisitions in the home sharing space. Will you make further acquisitions in the home sharing space?
Yeah, look, at Leisure we've known for 3 years. It's a full stack company, which means it manages the buildings that it takes, and it has a great management team. To the extent where the second and third are true, we are absolutely excited. The first one is an outcome. That is, how long have we known each other? But to the extent it's a full stack company and a great management team, we are of course interested to talk.
So really interested primarily, so your M&A strategy is very much focused on full stack companies.
The third is the most important. Our M&A strategy is focused on competency building. That is, are there managements are there companies that have done something so unique that we will learn and do bigger things together? Or are there managements who are going to work with us as real partners and create big impact? So to the extent there are competencies, we're very interested. We're not interested in just buying growth or revenue or profits.
Okay. The second one, with your, how do you not overstretch itself in the long run? Demand, sort of supply.
Yeah. So to the extent if we don't double our occupancy every quarter, I think there's no reason for us to add supply. So to the extent our demand curves look up over a period of time, I think we're happy to continue investing on the supply side. On the second one is on bandwidth. I think everything we do is competency linked, which is why every overnight success is a 5-year-old story. So next 4 quarters are locked and loaded. We are now working for how do we deliver 5 quarters ahead. If we don't deliver the next 4 quarters, it's an operating execution miss. It is not a competency loss. So that's sort of how we try to ensure that our bandwidth is well organized, but it's always hard.
How much of your distribution strategy is reliant on OTAs versus, I guess, hotel beds type companies that are bed
So I guess this question was also asked in the morning. I want to share that our view is OTAs can be great partners to hotel chains. I have had this mindset that a lot of my hotel chain owners and friends tell that my loyalty program will help me curb OTAs. I want to remind them that discounts is not loyalty. There's a difference. And they end up just discounting the customer more and more. My view is getting 30% of your revenue from customers who stay for 20 nights a year, that in my view is loyalty. So with that perspective in mind, thank you for the one clap. But I know the big one is coming. I'm very thankful for that.
Sort of over.
But coming back, I think the perspective is we genuinely believe that OTAs can be great partners of hotel chains, and that's the philosophy that we operate with across.
Let's take one last question. Are you concerned with growing too fast in a segment that is very dynamic with low brand loyalty? Some of your competitors also coming out of India, Tribo and others. Accor, I guess, is looking at buying. That's the one that was rumored. Too fast, growing too fast.
Yeah, so from our perspective, reality of life is it is about the value you accrete in the assets that exist. Any data point will tell you that OYO Hotels' growth, repeat customer base, direct and third-party distribution base, and the competencies we have are all unique. And that is why there is only one OYO in a segment that could have been broad enough.
To the hotel CEOs that say you're not a competitor.
Yeah. No, I appreciate
What do you
it.
say?
I completely agree that, my perspective is we all have mutual respect for each other. We, of course, like to believe that we don't compete with each other. And that's the right thing to the extent that OYO can continue growing at 4.3 times year over year.
Okay. All right, let's leave it there. Thank you,
so
Ritesh.
much.